Good morning, apes. Hope everybody is doing phenomenally well today. Thank you for joining us for the second installment of the video walkthrough of the Daily Peel here today. Of course, everybody's favorite recorded video series on everybody's favorite YouTube channel with everybody's favorite company, of course, being the Daily Peel and WSO. Welcome once again to the Daily Peel Global Headquarters. As you guys can see, my shades are still absolute pieces of shit over here, but it's okay because the Celtics have been an absolute wagon as of late, and they're playing here tonight. So we're getting very fired up for that. You know, it's a great day to be wearing some Celtics gear because the S&P 500 has been playing just like the Celtics lately too, ripping in 17 of the last 18 weeks, going up higher, putting on the green print as well. So it's very much above the average, but still, we're all here for it. You guys know what we're coming at you with here today. We got Daily Peel number 661. We're going to be talking about a whole lot, but we're starting off with the Services PMI report. Quite honestly, a pretty boring macroeconomics report, but nothing's ever boring over here at the Daily Peel Global Headquarters, especially when you're working with these kinds of apes that we have in the office. But regardless, that's what we're dealing with now. We'll be talking about what's going on there, why it actually kind of paints a little bit of a brighter picture for consumer spending and the outlook of the U.S. economy. All right, then we're going into some stock movers of the day. Of course, New York Community Bank once again stole the show alongside Target, but we did get some absolute piece of shit days from some of our favorite stocks to make fun of as well. Then we also got an absolute piece of shit day from everybody's favorite digital asset being, of course, Bitcoin. You know, I always forget that I can say that and crypto when I'm on the video because, like I've said a bunch of times, Google will block the delivery from all of you guys if we say that word even one time. So we got to be a little bit careful, but here we can have some fun, and you know that's what we're going to do already. All right, taking a look at the market snapshot, I mean, WSO portfolio absolutely destroyed the S&P 500 yesterday. We lost only 1.01%, whereas the S&P lost an enormous 1.02%. That puts our annual return at about 6.76%, or year-to-date return, I should say, we're at 6.76. S&P is beating us at 7.08, and the NASDAQ absolutely humiliating everybody else at 7.95%. But the real league leader is, of course, Ethereum, up 62.71% for the year so far. This thing is ripping absolutely through the roof. Bitcoin, same thing, up about 51.6%. Yesterday was one of the most volatile days this thing's had in quite a long time. And so it's a lot of fun to see, all those whales absolutely dump out of the Bitcoin market after it crossed that hysterical and oh so important $69,000 line. We all know one of the key fundamental analysis techniques within crypto is, of course, memology, and something that we all learn in Basic Finance 101, something we all get educated on the WSB subreddit as well. So, of course, it's an important thing to stay tuned for, but as soon as Bitcoin ripped into that meme territory, it did pull back. What does that say going forward? I have no idea, but I'm sure everybody on Twitter is going to find a way to spin it to be bullish. All right, but let's go ahead and get into the main macro story of the day here. So, you know, if you look it up, if you Google America's national pastime, you actually probably won't believe what you're going to get. Most people would probably expect, you know, football, drunk driving, something like that. But it's actually baseball. That's America's favorite national pastime. But, you know, that was said more than 100 years ago, back in like 1911. I'm proposing a new national pastime here today, and that is, of course, going to be spending money. That's all of our favorite things to do, just running up the plastic and putting everything on the credit card that we can, and preferably if it's dad's credit card, that's kind of the best way to do it. And so we've been a little bit concerned so far this year because we're seeing a little bit of a downtrend in the manufacturing sector, or, you know, questionable downtrend because we're getting reports pulling in the opposite direction. We have S&P saying, oh, it was one of the best quarters in a while. We have ISM saying it was another piece of shit quarter. So we don't really know what's going on, but if we go ahead and take a look at the services side of things, we can actually finally start to get some answers. So any economy is going to be made up of partially goods, partially services, goods being physical things that you buy, services being services that you receive, not something that you tangibly get necessarily, but a service around that. And so if you actually break down US GDP, about 70% of it is actually spent on services rather than goods. Once economies get to a certain point of thinking that they're better than everybody else, then they start to spend a hell of a lot of money on services. We're starting to see that in countries like China and other emerging markets that are kind of building up to that standard already. But so 70% of the U.S. economy is going to be services, and of course 70% of U.S. GDP is consumer spending. So this is going to be an important line item to be looking at. If we go ahead and take a look at the headline number, services PMI for the month of February was at 52.6%. That's a big number for us today. That was a bit of a downtrend from January, but of course anything above 50% is still expansion. 52.6% is some pretty strong expansion as well. And when we weight that against the 47.8% that we saw in the goods PMI earlier this week, we start to realize services are playing like Will Chamberlain, dropping 100 points here. If we go ahead and do some absolute garbage economics, but then again, pretty much everything in economics is nonsense. That's why it's one of our favorite sciences, because you can do anything as long as you can bullshit your way through it, and there's nothing that economists do better than bullshitting. So of course, if we were to weight these two together, we get a total sector economy of total economy PMI, of 51.16. Now, like we said, it is nonsense back of the envelope math, but it still is something that we can say or formulate into sentences. So, of course, we did it because it is the world of economics, and we can do whatever we want here. But if we start to break down the numbers a little bit, we start to see there are a little bit cracks in the armor. Now, new orders is definitely not where you're going to find those cracks. We're seeing about 56.1%. So good on you guys for buying new shit, even though it isn't necessarily things that you can hoard in your apartment. Just good on you for going out there and spending money. All right, but if we break it down a little bit further, we start to look at price indexes. We're seeing that's at 58.6%. Now, that's a big downtrend from the above 60 that it's been at for quite some time here. Shout out to JPL running up inflation. But of course, we are still seeing them move in the right direction here. Now, some of the more concerning stuff came once we broke it down a little bit in these bullet points. These ones weren't worthy of getting an entire chart in the daily peel. We know how important that recognition is going to be. And we did see business activity increase to 57.2% in the month of February. And that's phenomenal to see, because that just means businesses are doing more shit, which means you're making more money, I'm making more money. Hopefully they're making more money. I'm actually not making any money. I don't know why I said that. And that's probably why we saw it decrease to 48 in the employment reading of the services PMI. Now, that certainly isn't much of a concern at this point, especially because if we just wait 2 days, we're going to get the entire economy situation of the jobs report. Basically, is going to be released on Friday of this week. So we're going to see those numbers pretty soon. So not entirely something to get concerned about just yet, but definitely alerting us that we should be on the lookout for some weaker numbers on Friday. If we are, market's probably going to respond pretty poorly. We also saw a decrease to 48.9 in supplier deliveries, a decrease to 47.1 in inventories. So seeing that spread increase between inventories and new orders rising, inventories decreasing, that's a great sign for an economy that shows that demand is robust. People are continuing to order shit, so we love to see it. And we all know that kind of along the way, services have been much less impacted by inflation than goods have. It's really been a lot of supply chains and other commodity bullshit running up the prices of a lot of these goods. Services, thankfully, don't have to worry about all that stuff. So it's a little bit of a different ballpark. But of course, given that services are making up 70% of the economy, we should actually probably care a little bit more about this. Now, this report, wasn't an A+, but it wasn't necessarily anything to get concerned about. C's get degrees, as all of you guys know, because I'm sure we got a lot of 2.5, 2.7 GPA students, just like myself. Shout out to all of you guys out there and all you guys going on spring break there as well. So this is kind of a C, C+, maybe a B- if your professor really likes you. But we certainly just hope the professor of the class that you just turned that paper in before you went on to spring break likes you, because I think you're going to need it, much like the U.S. economy is going to need a little bit of help going forward. All right, with all of that said, let's go ahead and dive into some of the biggest stock movers of the day. New York Community Bank has been stealing the show in the financial services sector all throughout 2024, now up 18% on the day yesterday, but that's coming off of a low not seen since 1996. That was when he had President Bill Clinton. I don't even know if MTV was a thing at the time yet. Seeing MTV right now makes me sound so old, but I don't even know if it existed at this point. So that's kind of the context of what we're talking about. This is only 2 years after Forrest Gump came out. It's before Tom Brady was even drafted. So this is, by all means, it's equivalent to the dinosaur times to me. But we haven't seen the stock this low since 1996. So any kind of good news, the stock goes down for a huge rebound. Now, there wasn't really any good news yesterday, but there was less bad news than there has been. So NYCB did come out on Monday and say that deposits were kind of at a bit of a flight risk, which is basically the worst thing that a bank could say. That's kind of a death sentence. That's a nail in the coffin for the most part. They said they're going to start to pay up higher rates on deposits in order to stem that flight risk, but it's not looking too good. Jamie Dimon to the rescue could be in question once again. I personally just feel awful for all of the boomer shareholders of these companies, because if you have a grandmother or a grandfather and they can spell the word stock market, give them a call, make sure they don't own NYCB, because if they do, they probably have whiplash, need to get taken to the hospital at this point. But let's go ahead and move on to a not so boomer stock, and that's of course going to be Target. So Target, your girlfriend's favorite store, my girlfriend's favorite store, my mom's favorite store, pretty much everybody's favorite store. And so it's no wonder that they absolutely destroyed it in Q4 earnings. Numbers were okay for Q4, but it was really the guidance going forward that got everybody fired up. So They did beat on the bottom line. They missed slightly on the top line. And the real depressing point was that they not only missed on the top line, but revenue actually went down for the year as well. Now, the good thing is that they did announce some new shit. They also announced a revenue target for this year of growth. That's basically the target. That's the guidance they were providing. While it doesn't sound too exciting, the market certainly did get fired up, as they weren't really planning on any of that this year. But they also announced the Circle 360 program, which is basically a competitor to Walmart's whatever bullshit, Amazon Prime. It kind of gives you access to better delivery. So it's like guaranteed 2-day shipping, whatever. But it's actually been introduced at a bit of a promotional rate of $49 per year until, later this year. I don't know exactly what the date is right there, but I'm sure my mom already has an account for me, so I'll probably give her a call after this and check that out. Either way, up 12.1% on the result of those Q4 earnings. They definitely can't be mad. All right, let's go ahead and take a look at GitLab. Now, I will never lie to you guys. You all know that I'm a moron. I am certainly not nerdy enough to know what the hell this company does. I don't think really anybody else is either, and they certainly won't be for long, especially given how shitty this guidance was from the company. So, it was actually a fairly solid quarter in Q4. They saw 33% sales growth, beat on the top and the bottom line. Not a whole lot more that analysts can ask for, but of course this is Wall Street, where, the entire industry is made up of screaming toddlers that never got past that 4 to 5 year old stage of, demanding what they want in the candy aisle of a grocery store. And then their mom, of course, giving it to them. So now they come into the market, and anytime something that they don't like happens, they absolutely just lose their minds. So that's basically what happened yesterday when GitLab said that they were only, quote unquote, only going to have 26% sales growth in Q1. Analysts were absolutely horrified. They shit their pants. They threw up all over the place, and the stock fell 21% on the day. But the real problem of the day yesterday was, of course, big tech, and specifically our boys, Microsoft and Apple, aka, you might have heard of them before. These are the two largest, most valuable companies in the entire world, both dancing right around the $3 trillion mark. We saw them absolutely dump yesterday. So Microsoft led the way lower, but Apple was a real vibe killer in terms of news. There was a report that said iPhone sales in China would decline by about 24%. Obviously, that is horrific to Apple, even though, as we talked about yesterday, it is becoming more and more of a services company. This is a lot of those boomer investors that are still around and think they can understand the technology industry. Really, nobody can understand it, but certainly not old people that look at their phones like this, when you kind of hold it and you scroll through with your index finger like that. Makes me want to throw up when I see it in public. But either way, we did see these companies sell off. A lot of that was because of Apple's missed sales. Microsoft, it's a $3 trillion company. There's good news, there's bad news every day. Yesterday, there was news that the company might be getting themselves into a bit of a even hairier legal position because they invested in a competitor of OpenAI. I mean, I'm pretty sure their whole growth prospect over the next decade and a half was the fact that they owned OpenAI, or at least that they were balls deep in the equity of it. And so seeing them start to kind of spread those bets a little bit, they're kind of begging for some SEC or other three-letter agency scrutiny. We'll see if that goes well for them. It is Microsoft at the end of the day, but that took down really the entire rest of the market, losing 3%. So it was tough to see. But what was really tough to see was the zombie apocalypse actually begin here in the United States and around the world yesterday. Now, it's not like you've seen in movies, TV shows, or anything like that. This is a revival of the worst kind. It is so much worse than the undead coming out and starting to eat all of our brains. We have Bitcoin bulls back on Twitter, telling people to have fun staying poor and to hodl and whatever other cringy ass shit they want to do to convince themselves that sitting in their mom's basement and trading on the internet is a real job. That seems like what's going on here, but we did see Bitcoin reach an all-time high yesterday. So this thing absolutely ripped. It was Tuesday morning. It crossed the $69,000 line. The official high was $69,210. So it didn't get up to that crucial level. The real crucial level is going to be when it hits $69,420. From there, it's probably just going to candle right up to $100,000. I mean, if I was betting on anything, that would 100% be what it is. But still, it's all that $7 billion worth of assets that has flown into the industry because of spot Bitcoin ETFs. If we go ahead and take a look at this chart that we stole from the Wall Street Journal, shout out to the WSJ. Please don't hit us on a copyright suit, even though I don't think this is copyright, but maybe somebody smarter than me, or a lawyer, or somebody actually useful to society can tell me if this is going to be a problem. But we have seen a ton of inflows come into the sector. Obviously, BlackRock is absolutely dominating. They're over $7.5 billion. Fidelity is just under $5 billion, and then nobody else is really even close. I mean, ARK and Bitwise are both above the $1 billion line, it looks like. Invesco, Valkyrie, Franklin Templeton, Van Eck, Wisdom Tree, these guys are going to be out of the market relatively soon. ETFs is an absolute power law game. Everything kind of goes to the highest or to the best one. So that's exactly what we're seeing right now. But we also have seen about $7.5 billion worth of assets flow out of Grayscale Bitcoin Trust, as that has been converted into an ETF. A lot of arbitrage opportunities on that trade. So, of course, we're seeing people pile out of that. But still, there's other things to consider besides just the $7 billion inflow. Next month, we are expected to see the next Bitcoin halving, aka the halvening. This is when the hash rate of Bitcoin basically decreases by half, or not necessarily the hash rate, but the mining rate. So, to jog everybody's memory, because I'm sure we all knew this back in 2020 and 2021, but I had to look into it again yesterday to get my numbers right here. So the Bitcoin halving, what exactly is that? Bitcoin is what's called a proof of work cryptocurrency network. So in order to validate transactions on the network, there has to be a lot of nodes of computers. A lot of those nodes are computers that are kind of mining things. What these miners are doing is basically keeping the validity of the blockchain by solving these transactions, regulating the transactions that go through, and making sure none of them occur twice. And so in order to incentivize these computers being linked to the Bitcoin network and kind of giving it that compute power and giving it that hash rate that it needs to prosper, what they do is while they're mining, these Bitcoin miners are rewarded in Bitcoin for every block that they produce. So when they're validating these transactions, they're essentially producing what are called blocks because they're linking one transaction to the last one, and that's where you get the term blockchain. So when you mine one of these blocks, of course, there's got to be some kind of a reward for it because it takes energy, it takes time to be able to solve these complex math problems and be able to actually mine this shit. So what Bitcoin does is every 4 years, the complexity of those math problems gets a little bit harder. It actually gets twice as hard because the reward for what these miners earn is actually reduced by half. So since 2020, Bitcoin miners have received about 6.25 Bitcoins for each block that they produce. Beginning in April of, or actually next month, just beginning in April 2024, that's going to be cut in half, and these miners are going to receive 3.125 Bitcoins for every block that they produce. So for every contribution to the network, they're going to receive half as many Bitcoins as they did before. This is phenomenal for buyers of Bitcoin because all that is slowing supply. And slowing supply, it's a miracle. It does a whole lot of different things. It's going to be slowing the rate of inflation, controlling prices, controlling for demand, and of course keeping up with the hash rate as well, because we're going to see a lot of miners exit the market because the rewards simply aren't incentivizing enough. So that's going to see the creation of Bitcoin slow down. Obviously, when supply slows down, that's great for demand, assuming that it doesn't fall, or at least that it stays at the same level. Now, this is going to keep going on every 4 years until about 2140. Yes, I am talking about the year 2140. That is when the last Bitcoin is said to be mined. So we haven't all destroyed each other under, an ash cloud of nuclear bombs and random other bullshit that our elderly statesmen are going to get us into, then, nobody alive today is going to be around to see this. But hey, maybe your great-great-grandkids will be there. Maybe you can leave them a Bitcoin from way back in the early ancient years of 2020, 2021. That would be pretty cool. And hey, it's a great way to, actually potentially bond with and enjoy your family. I know that sounds crazy to most of us, but I guess it is something that is possible. At least that's what the sitcoms that I watched growing up suggest. All right, then the question for us today is, will Bitcoin recover from this horrendous drop? Because that was another thing that happened yesterday that I didn't even mention. As soon as it crossed that $69,210 mark, absolutely plummeted right back down to about $61,000. Finished the day around 66,000. As you guys can see, I literally go ahead and timestamp this because, here's the Daily Peel. We're doing everything that we can for you guys. Now, our other questions, of course, is what's your year-end price target? We sure shit don't have one, but I'd love to hear if anybody has one of those bullshitty stock-to-flow models that they can walk me through and try to convince me why that thing has any validity at all. And of course, what other digital assets are you bullish on? We are certainly bullish on Ethereum. We have it in the WSO Alpha portfolio. But tell me, should we be getting in on Solana? Should we be getting it on Axie Infinity, potentially? What other nonsense coins are you guys pouring your money into? I actually had one of my friends who works for the U.S. military text me over the weekend and say, the exact text said, is Shiba Inu going to the moon? So my response, of course, was thanks for letting me know we're at the top. And take that as you will. But, I think based on the price action that we saw yesterday, after this halving, it might be time to reassess the reassess your portfolio in the digital assets market. But of course, we wanted to leave you with a quote from the digital asset king himself, Mr. Satoshi Nakamoto. A lot of people have been saying to me, David, you talk about Bitcoin all the time, and you're clearly such a technical genius that knows a lot about everything. Are you Satoshi Nakamoto? And so, no, I hate to disappoint you guys, but I'm actually not Satoshi, despite the fact that anybody that knows me knows I'm an absolutely phenomenal coder. And, cryptography has been my specialty since about second or third grade, when Bitcoin was actually released and the white paper dropped back in 2008. But no, I'm sorry to disappoint. I'm actually not Satoshi. Still, this is a great quote from him. And he said, "Imagine if gold had turned to lead when stolen." That's referencing the Bitcoin network, saying that really nothing of value can get stolen from this network, except, of course, if somebody steals your little fucking USB stick or whatever the fuck, the little jewel looking thing that you plug into your computer and then you have all of your Bitcoin again. If they steal that and your 60-word passcode, then I guess you're fucked, but you can't really steal it within the network. Either way, that pretty much does it for today, guys. Leave us a like, leave us a comment, subscribe. Please do anything to help me keep my job here. We would love to see you guys give us some comments, see exactly what your thoughts are on the video format versus the live video. We want to give you guys what you want. And so, just like the Celtics are doing for me as an avid Boston sports fan this year, we want to be doing the same thing for you guys and keeping you guys just as pleased. Let us know if you have any other thoughts. Otherwise, it was an absolute pleasure as always. Happy investing, happy trading. We'll see you guys tomorrow.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.